In this video, traders, we are going to look at 3 rules to help catch intraday trends, and you could perhaps automate this. Stay tuned. Hey guys, warm welcome to you. Right, so these are 3 rules that you could perhaps easily automate, put together in some kind of alert or some sort of paint bar or something that would help you capture those intraday trends on an intraday chart. So what I mean, this is basically something that might help guide you on the resumption of the trend. So the initial drive is pulling back. How are we trying to get on board that subsequent move, maybe for the last kind of few hours of the day? So 3 rules, let's look at them. The first thing is we're going to use a linear regression. So the standard settings on the linear regression, whatever the standard settings are on your platform, it doesn't matter. But linear regression basically just draws a fixed line. It does that, or it does a flat. It's not necessarily going to be flat, or it does that. So it draws a fixed line, basically depending on how big the trend is. It's kind of a best fit trend line. And we use that on a 15-minute chart. If it's up, then we're only going to look for longs. If it's down, we're going to look for shorts. You could add an additional filter in here and say it's got to be a certain number of degrees, but let's not complicate it for now. Let's just keep it broad. So if it's up, we're looking for longs. If it's down, we're looking for shorts. And that's on our 15-minute charts. That's our first kind of rule, if you like. Right, the second thing is a wick, and this is on a 3-minute chart. So if we can imagine, let's draw our chart here. We've had chug, 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 and now it's coming back down. What we want to see is, obviously this is zoomed in, we want to see something like that on a count. I know that's stupidly out of scale, but you get the point. Let's imagine there's a big magnifying glass on this little area here, okay? So that's what we want to see. We want to see a big wick. And there are some rules that you can put in for that as well. You can put in stuff like, okay, well, the body has got to be less than 50% of the range. Or if you want to go aggressive, you could say less than 30% of the range. So if the range is whatever arbitrary number it may be, but you get the point. The idea is you don't want a body that's down here. You want the body to be, 50% is a good level to have it. Not necessarily too bothered about the color, although I would prefer it to be green if we were pushing up, but red, we could possibly cope with that depending on the situation. Again, play around with it. There's no hard and fast rules. If you want to be extra strict, then go green. So the wick, there's got to be that wick that's larger than the body, and that indicates on the 3-minute chart specifically that potentially markets push lower and push back. And so now we're aligning and saying, okay, obviously if it's pointing up, we want a wick to the downside. If it's pointing down, linear regression, we want a wick to the upside. So we're now filtering for a few things, right? The trend, bang, that's number 1. And now we're filtering for this. Now the additional final thing that we want to give us this alert is volume. Again, on the 3-minute chart, looking at that specific candle has the wick. I'd like to see, and again, this is going to depend on what market you're trading. We'll look at Forex in a moment, how we can adjust for not having the volume. But let's say we're trading indices, then indices, your volume may well, or if you're using a futures contract, obviously because the index doesn't have volume, but if you're using a futures contract as a guide for volume, then you can't go crazy and go, I want 3 times the amount of volume, the average volume. You're going to take an average volume, and that may be a 10 period, and you're going to say something like, and this is a little bit of a game to play, it might well be something like 1.5, in other words, 1.5 times the average, or it might be 2. You're going to have to adjust it because some markets don't have that much of extreme volume. Stocks often do. You might be able to put that 2, 3, 4 times because stocks go very, very quiet and then rip. But indices or futures contracts, not necessarily that aggressive. So play around with it. So what you've got now, aligning yourself with the trend. You need to eyeball this as well and say that this is the kind of trend that you want, because that will just turn up on the slightest thing on a 15 minutes. So this is something that you've already eyeballed, you want to get on. Your linear regression is pointing to the upside. You've got a wick on your 3-minute here, and you've got volume. So in other words, this candle becomes quite important, and it's a candle that's potentially showing exhaustion and it's pushing to the upside. Now, if you're trading in Forex, you can't always get volume. Some brokers will give you a kind of guess on volume. You can't use volume. Then maybe you can use that wick. You could maybe add an additional filter and say the whole range. If that whole range is bigger than the last candles, and use 1.5 or whatever that may be, that might help as well. Something additional to it. So you can quite easily program all these rules in, guys, and have something that either paints that bar a certain color, depending on what platform you're using, or puts a marker like below it, a dot or something like that. Or if you want to go crazy, you could have it fully automated, but obviously you have to have some stops and rules and other bits and pieces in it. But anyway, there's the 3 rules to help catch those intraday trends. Linear regressions get you in the trending environment, the wick. And the importance of this, guys, finally, is that if it's been stagnating for too long on the 15-minute, this might go flat or go down. And that's what you don't want. You don't want it to be stagnating for a long period of time. You want that to be up. That's why we're going on a bit of a higher time frame here as well, to give ourselves a little bit of leeway. But you also want to make sure that's pointing to the upside and hasn't drifted down because you've been stagnating for too long. Then it kind of trades negated a bit. The wick to show that the intra-bar change in sentiment, and the volume to indicate perhaps that there's much more buying aggression than there is selling on that particular bar or candle. All right, guys, let me know your thoughts on that. Comment section below. I appreciate your support if you're a subscriber, and I appreciate your likes and shares and all that other good stuff. Keep your risk managed. Whatever you do, take care. Bye-bye.